All right, so this is just an update, and I'm going to be thinking aloud while I'm recording this. Now, what we're noticing after what was a pretty sharp rally in the previous week is that a lot of commodities and a lot of instruments are now starting to look a little too overbought or overstretched on the upside. And we had spoken about this in the morning, so you can see here that copper. You can see the oscillators here as well. So let's just go to the full screen mode, and you will notice that if you see this over here, okay, just see the oscillator here, you will notice that it is coinciding with the resistance, and that is where you're noticing that your that's where the rally has stopped. So this is something that I expect to see more and more of in a lot of instruments, because they have really run up a lot, and you would not expect a lot of these instruments to run up so much. So let's if you just carry on looking at some of the other instruments, you will notice a similar trend. So this is obviously copper in MCX. Now let's just look at gold and silver. Now let's look at silver for that matter. So this is silver pegged to the US dollar. So what you will notice is that the silver is obviously in an uptrend, but if you see here right now, you see the oscillators. So the oscillators got extremely overbought. So what do I mean by that? If I just so let's just look at the oscillators here. You see this red line here, this marks the you see the red line here. This red line is what is basically where we are saying the market is overbought, or that it has run up too much, and that we expect some mean reversion. Now you see that post that you got a bit of a consolidation, and but after that the market has really not gone up much. It has actually been struggling. So if you just see this, you see that if I can draw this line here, you will notice that the oscillator is continuously going down, but you see the prices are continuously going up. So there's a sort of a divergence which is occurring, and this divergence is generally not a good thing. But here, I think what's going to happen is we are going to see some more maybe sideways correction, and I think this correction here is probably what we are getting. We're getting a sort of a flag. There can be a prolonged correction. I think that is what is going to happen in silver. So I think you have to be prepared that this is not something that is going to continue to rally very fast right now. And also the fact that the oscillators have petered off, they are not really going anywhere. It just shows that maybe the instrument is taking a breather after a very sharp rally. The other interesting thing I would say here is that you have the if you see, this is right at the mean level. So after the prolonged consolidation, whenever this breaks out, it will have a lot of room to go up on upside. So I still think that we expect the move to happen on the upside, but like I was saying, because it has run up so much, and despite the oscillators sort of not the momentum weaning out, the prices have carried on. There's a possibility for a long consolidation. So that is what I'm expecting out here. So now this is the dollar index. So if you look at the dollar index, I think the most interesting thing about dollar index is the fact that it's formed a nice prolonged top. So you can see from October to November, for a month, it has actually gone into a topping pattern, and then it is broken down. You see this part here where it's really breaking down. I'll just highlight that for you. So you see this is the level which has been tested twice, here and here. And now, of course, this level has been broken down quite strongly. This whole move down here, this is happening very, very sharp. So you can see the speed at which the prices have moved down, or which at which the index has broken down, is actually very sharp. This kind of a move, generally sort of uh, confirms that the trend is in the downward direction. So what has happened now is that the dollar index really went down very sharply, and right now it's sort of trying to do a bit of a mean reversion. You can see the oscillators after getting extremely oversold. So this is what I'm trying to mention. If you see the oscillator here, it is extremely oversold. It is closer to the green line. So you can see whenever that has happened in the past, you can see how the prices have then sort of bounced back. So even here, the same thing happened. And I guess even here, you'll probably get some sort of a bounce in the dollar index, okay, before you sort of see it fall back down. And I think that is the most likely scenario here. So again, when the dollar will probably bounce up, we will see some sort of a bearish undertone. But I think overall, if the dollar index were to rally, I think it'll be a great time to short it, because I think the trend now has been confirmed on the downside. So I don't think there should be any issue. I think it will continue to sort of move down or remain under pressure, which is very good for the equities, because equities were really being hurt, by a very sharply rallying dollar. Now, now I want to draw your attention to this Bank Nifty chart. And so one thing I want to point out here is that if you see this high, this has been made in October 2021, and almost a year later, again, this high was made in September. And again, the markets, that I would say the index, rather, Bank Nifty fell, and now it is actually crossed above. So if you see this level here at about 42,000 where it's trading, it's actually above the previous highs. Now let's go back and see what has happened previously, and why I'm really interested in what is happening right now. You see, these are the oscillators, okay, and you can see these are the overbought readings in the oscillators. Now previously, whenever this level has been reached, and with this kind of reading, you've almost always got a correction, and you've got a correction for almost, like, you would say 2 weeks sort of a thing, and it's been a pretty deep correction. It's been sometimes 10% or sometimes 7-8%. Now what is happening again is that you're having the index reach these levels, okay, but the oscillator, so even though the index has broken out to all-time highs, the oscillator is overbought. And if you see this momentum here, you will notice that the momentum is, sort of struggling its way through. So this breakout, while as long as it stays above this, it's okay. But there's a very good chance that it might not sustain, and you might actually see a bit of a correction or a consolidation before it continues to break out, simply because of the fact that the oscillators on the daily time frame are really looking stretched. So while the breakout, while there's been a key, I would say, a new all-time high breakout, and that is a very good, it's something which is symbolic of a bull market. I think this breakout here, I think we might have to be a little careful, and there's quite a high possibility that we get a correction from here. So in Nifty Bank, if that were to happen, which has been one of the leaders, I think we could see we could see the headline indices not do too well. So I think this is the time when one should be cautious. If you have, probably got some of your banking stocks which have done well, maybe now is the time to actually book some profits. And it's not an investment advice, but technically speaking, it really looks like it could be, it's something that you should watch out for, the technical patterns developing on some of those. There's a very good chance that you might get a short-term top on the hourly charts, etc. So that's about Bank Nifty. And so let's move on to the next one. All right, now this is a chart of gold pegged to the US dollar. And what you will notice here is that I've marked these arrows, and you can see these arrows represent a support level, which is also drawn here. And that level is 1682. And this is in dollar terms, remember. So this is $1682. And what you're noticing is that the markets broke below it, but it remained below it for a very small period of time. And then it has now again gone back above. You can see the speed at which it has rallied is quite high. And what we are also noticing is that if you see the momentum oscillator here, it's just crossed above the mean level, but it is not overbought yet. There is a lot of scope for it to still go higher. So in all likelihood, the idea is that we might have gold consolidate a bit and then continue its upward journey. And as you can see here, the final top came coinciding with the highs of the momentum. And you can see the highs of the momentum are there's plenty of room for that high. There's plenty of room for the momentum oscillator to get overbought, which means that in all likelihood of a short consolidation, we are going to see gold continue to rally up. So that is a technical setup that gold has really made right now. And I think it makes a lot of sense to pay attention to something like this. Of course, on the way, you might find some levels like here 1911, where gold might just halt a bit. But I think overall, I think looking at the current setup, any dips in gold, it will probably be a setup to look to go long. And I think that's where the risk reward ratio lies. All right, I think that's about it. And I'll be ending the video. Thank you for watching.